An important US-led trade agreement called the Indo-Pacific Economic Framework has been in works for a while now. Now, the IPEF is more of a mechanism to counter the aggressive and non-transparent trade and economic policies of China. It is a group of 14 countries in the Indo-Pacific region, which makes up over 40% of the global GDP. India has joined the alliance but opted out of one of the pillars of the agreement. Let's discuss this. Our country has agreed to join three pillars that are supply chains, tax and anti-corruption, and clean energy, but opted out of the trade pillar for now. Now, India considers US standards in technology, labor, and the environment to be not satisfactory, and it believes it contrasts with the benefits that India will get from IPEF. While India can counterbalance China's growing presence in the Indo-Pacific region, we believe the step to opt out of one of the pillars is wise at this current stage. IPEF commitments would have made India to reorient domestic approaches on issues like tax, labor, climate, and digital trade, for which the domestic regulations are still not firmly in place. Now, we will discuss this in detail in our Third Empire episode. India currently has 106 unicorns with a combined valuation of roughly $343 billion, making it the world's third largest startup ecosystem. Now, for some years now, money has been pouring into India's startups, resulting in high valuations, sometimes in the absence of a solid business model. Now, numerous voices of worries are surfacing, calling into questions the high valuations of startups alone. In light of this, Sebi is closely monitoring how private equity firms and venture capital funds value the businesses and unicorns they fund. Now, let's look at this in detail. Startup valuation essentially points out the worth of a business, its idea, the product or service, total addressable market, and so on. Now, high valuations indicate success and the potential of a business. Now, this action taken by Sebi demonstrates that it is interested in determining the reliability of fund valuations. It wants to know every single detail, from the date of latest valuation to if the valuation is done by an independent or an internal valuer. Now, through this, Sebi aims to gain better understanding of the performance of alternative investment funds and the valuation procedures used in the industry. We believe the underperformance of a few well-publicized startups in the public markets may have prompted the need to understand private valuations for Sebi. As we mentioned earlier in one of our DITM episodes, India's new age companies must prioritize value creation and profitability, not just about valuation. While not completely, but some oversight from the market regulator would be useful. The focus will shift to establishing companies with solid fundamentals and sustainable business models. So what does these news mean for you? At this stage, we believe India is negotiating decisively regarding trade and investment rules in line with its interests. This will have an indirect positive impact on you. Broadly speaking, this news will help bring more transparency and make the Indian startup ecosystem much stronger. This will have an indirect positive impact on you. While I say this is me, Merlin Susanna signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.